Hey all, welcome to Share Trek. This is Raj here. First off, I would like to give a big shout out to Howard Dew. Howard has just joined our Patreon, and welcome Howard. And now it takes our strength in the Patreon to around 3 Patreons. We are still looking for 47 more. And I hope that happens quickly. So friends, first I want to talk about Ginkgo Bioworks because I have a personal stake in it, as well as it seems that Ginkgo is going through short-term stress. You would have noticed that though the market surged, Ginkgo stayed neutral. There's a reason behind it, and I put out a shorts video on that topic right away, but I think very few people had seen that shorts compared to the number of people see my other shorts. So I thought I'd address that in this video today. Today we are going to take a closer look at Ginkgo and a few key companies that have suffered due to SVB, and the potential opportunities are there to make some money in this process. So the video is going to be an intersection of the SVB crisis and our opportunities to make money and the genomic shares. So let's get started. Welcome back, friends. Bloomberg reported that VC funds, Cotu Management, Union Square Ventures, and Founders Collective had all told their portfolio companies to pull their funds from SVB. This obviously started a run on the bank. As I explained to you guys before, whenever a startup puts money into a bank, it draws down the money very slowly because it wants to keep the money going for as long as possible. It withdraws only for payroll and essential operating expenses. So SVB had a lot of funds, and that's the reason why they put it into the US bonds, assuming that it would be safe. Unfortunately, they put it at a lower interest rate, not knowing that the interest rates are going to go so high that the market price of their US bonds would fall, and therefore create a potential where customers might lose confidence and demand money. And that's exactly what happened. And they would have survived if they were able to hold the bonds until maturity, or even until the high interest rate regime was over. But the capital was never at stake. However, when many customers demanded money at once, they had to start selling bonds at a loss and to try to raise fresh capital. This set off the dominoes to fall, and the rest is all story that you guys know about it. So here is the list of around 15 companies among the many that have been impacted by SVB debacle, and all of these are for North America, and this does not include the Canadian clients except for one, which is directly with SVB in California. There are Asian and European clients as well for SVB, but I have not included them out here. So please let's take a quick look at the list of clients. So here I have this chart, and you can see there's a whole bunch of companies out here, starting with Roblox, 150 million, Roku, 487 million. Now this Roku is going to also have an impact on ARK investment portfolios because they have stocked up on Roku. BuzzFeed, 56 million, Sunlight Financial Holdings, 64 million, Acuity Ads Holdings, 55 million, Kohu Inc., 12.3 million, Rocket Lab USA, 38 million, Alchemy Technology, 3.3 million, Circle Crypto, 3.3 billion, and this was their USD crypto deposits. So definitely Circle Crypto would have a big impact. BlockFi, 227, again, these two are the crypto areas. Pioneer Global Inc., 20 million. Payoneer, I just opened Payoneer account when I started Buy Me a Coffee because some patrons in India were not able to open a Patreon account. So I had to open a Payoneer account, and that was the first time I heard about this company. And it seems that they have 20 million in SVB. I'm glad I have not had any dealings with them so far. Lending Club Corporation, 21 million. Veer Biotechnology, 220 million. So guys, those who are interested in HIV therapy, Veer Biotechnology is in the process of taking a HIV vaccine through clinical trials, and 220 million stuck in SVB is definitely going to have an impact on them. Sunrun has $80 million, and Ginkgo Bioworks Inc. has got 74 million of exposure, and this exposure is coming through Zymergen. Just a little bit of a backstory. Ginkgo completed its acquisition of Zymergen on October 19, 2022. The deal cost DNA approximately $300 million, and within a month, Ginkgo offered $100 million in fresh equity to raise funds to compensate for acquisition of assets and liabilities of Bayer, Crop Science LP, and general corporate purposes. And many people in the market were surprised that Ginkgo came up with a $100 million offer, and they had a further $15 million option also to in the offering. So I don't know how much they took finally, but $100 million definitely they issued. And obviously it means that DNA was stretched thin for cash and needed the money. Now we have news that 74 million of Zymergen is caught up in SVB. This is the reason why DNA shares did not move up despite the entire market surging. And I think that this is an opportunity to make some money in DNA. Friends, before you take my advice or anything, let me tell you something. I'm just a regular investor. I'm not a financial advisor. I'm not qualified to give you financial advice. Please do your own due diligence before you make any investment decisions. But to me, it seems that today the market was a bit ill-informed about DNA, and therefore not much activity happened, and DNA remained the same, because in a joint statement last Sunday, Treasury Secretary Janet Yellen, Federal Reserve Chair Jerome Powell, and Federal Deposit Insurance Corporation Chairman Martin J. Gruenberg said the FDIC will make SVB and Signature's customers whole. Further, President Biden made sure that he communicated this to the nation, and his main message to the nation, apart from this, and the reason why he actually made that statement, was to assure people that taxpayers' money will not be used in this bailout. So all of those big names have given a backstop. As a result, I think the DNA, Zymergen will surely get the money back, and DNA will surely bounce back and catch up on 15th when people realize that they dodged a bullet. Remember, DNA reported great results and beat EPS by 52% and revenue by 10.86% when they reported just last week. So to summarize, the sugar high in the market won't last. SVB news will soon be forgotten, and inflation and Fed hikes will take center stage. Fed will be cautious as to not push other banks into the same situation like SVB as they raise the interest rates. I think they'll be doing a secret stress test before they do the next rate hike to see which banks are weak, and then they would like to patch the weakness before they do the interest rate hikes. So there's a good chance that any rate hikes will be very, very moderate, and the banks will do their homework before that. And once that is done, we'll continue to have volatility, and the big drama of debt ceiling raise, which has been forgotten by everybody, will come into the picture. And I think right now the House majority is not yet prepared with their bargaining points. And it's going to be a bit of nasty to and fro, because President Biden has put an extreme side of his budget with an intention of giving some on the bargain and getting what he actually wanted. So he has taken an extreme position. And I think the House proposal from Kevin McCarthy might probably have a whole lot of non-starters as far as Biden is concerned. So it's going to be a bit of a nasty drama until the debt ceiling is hiked in the very last minute. So there's going to be a lot of volatility. So I'm thinking that covered calls could be a safe strategy to make some money while this volatility continues. So guys, please let me know what you think about the SVB impact on these stocks, especially what are your thoughts on Ginkgo Bioworks and Zymergen, and I would like to hear from you. What is your strategy? So that's all for now from me, my friends. Have a great day, and I'll catch up with you again in the next video.